Good morning. Joanne Jobin here with VID and another great town hall forum with Schwazze. Schwazze is building a premier vertically integrated regional cannabis company with assets in Colorado and New Mexico, and will continue to take its operating system to other states where it can develop a differentiated regional leadership position. The company's leadership team has deep expertise in retailing, wholesaling, and building consumer brands at Fortune 500 companies, as well as in the cannabis sector. And with that, before I introduce management, I would like to introduce a short video to start the meeting. Roll the tape, Todd.
Michelangelo said that every block of marble has a statue trapped inside. It was his job to get it out. Well, that's just how we felt when we saw the cannabis industry. Such raw potential, but so much more lying below the surface. And it would take strength of purpose and some serious savvy to release it. So how do you do that? You build a team of visionaries who bring rigor, responsibility, and professionalism to the table. Not just leaders in the industry, but leaders of industry. The best of the best in the relentless pursuit to make it happen. They, in turn, assemble a whole team who can get to work, cutting dead weight, stripping away the bad, and nurturing the good. A team that's driven to foster meaningful relationships with partners that, when working together, become even stronger. The result? A new mindset and a much-needed outlook that fosters a potent, healthy, and more sustainable business. And that's what the cannabis industry needs right now. Schwazze, grow forth.
Thank you, Todd. After their presentation, we will open it up to a moderated Q&A session. So please let us know where you are from in the chat section, and don't forget to place any questions you may have to management in the Q&A section. And please don't forget to fill in the questionnaire when you leave the platform. This helps all of us to communicate better to you, our shareholders. And now I'm pleased to introduce CEO and Chairman Justin Dye and CFO Nancy Huber, who will both take you through the recent highlights of the company. Nancy, Justin, the stage is yours.
Thank you, Joe. And it's great to be with everybody. Nancy and I are excited to tell you a little bit more about Schwazze. We love the industry. We believe cannabis, this is the right place and the right time to really be building out an industry. We are very excited about Schwazze being one of those growth leaders in the industry, and what an exciting time to be a part of cannabis. And I think there's a lot of good things ahead of not only our company, but the industry. So glad to be here with you, and we'll take you through our corporate presentation here. So we're a leading vertically integrated retail operator. So we lead with retail, with great brands. We have a strong wholesale business with brands as well. What differentiates us, we strive to be the number one leader in those operating markets where we serve customers, and that's Colorado and New Mexico. If you look at us at a glance, headquartered in Denver, Colorado, we have a regional office headquarters in Albuquerque. We have announced 37 dispensaries, so we operate 23 in Colorado. We've just announced 2 more Lightshade acquisitions, which is in Washington Park and in Aurora. And in New Mexico, we've opened 2 more stores, adding to the list of stores there to 12. And those 2 new locations were in Ruidoso and also in Albuquerque. On the cultivation side, we have 7 facilities, 3 acres of outdoor, 111,000 square foot indoor growing cultivations, Manufacturing, we have 2 campuses, one in Albuquerque, one here in Denver. And then if you look at our brands, we have our Purple Bees consumer product brand, which is focused on high quality vapes, as well as our new banner down in New Mexico, our Greenleaf. We of course run Star Buds here in Colorado. Emerald Fields is a banner that we run in Colorado as well, and then our Grow Forth Gardens, and we're excited about that. So cannabis today, we think certainly momentum is on the side of the sector. We have 20 states where it's legal today. We have 5 more states that are looking at legalizing adult use cannabis. So lots of momentum. When you survey Americans today, 68% of them are in favor of legalizing cannabis, and that's only growing stronger as some of the stigma wears off and it's becoming more prevalent. If you look at teenager or younger generation, I guess younger adults, 21 and over, they continue to seek out cannabis for the first time more than cigarettes as well. So, great opportunity here. We believe that the sector's growing from a medical as well as a recreational perspective, and we have great momentum. And we even have some regulatory momentum that's been some good news here lately as well. So our strategy when we started the company was to really start with retail and go deep and build a very strong retail business and also have a complementary wholesale business. So start with retail, running great stores, knowing what good stores look like from a service product standpoint, from a quality standpoint, and then run lean operations. So starting with retail, working through to procurement, distribution and logistics, manufacturing, as well as cultivation, and then creating the opportunity to build our own brands and be able to bring those to market while also still partnering with outside partner suppliers where we host their brands that consumers seek every day. So nice blended company with broad assortment is really what we want to stand for. And then we've invested heavily in data analytics so we can measure and manage the business, which we think gives us a competitive advantage. We've built that from scratch. So we have one ERP system with one point of sale system, and we have good analysts that are looking at the data, helping us make decisions. So it's better to do it up front versus doing it later in life. I've learned that through my different opportunities and different businesses. So we're set up pretty well here from a data standpoint. Going deep and why that matters. This is really about driving market share within those respective markets where we compete. So really driving geographic coverage in Colorado, in New Mexico, going deep with our retail footprint, meaning looking at all those neighborhoods where we can serve customers and give them what they're looking for in terms of assortment, quality, and service. And we continue to work hard in Colorado, New Mexico, finding new locations. That allows you to have shelf space. So it's very valuable real estate for supplier and vendor partners who want their products on the shelf. And then we can work with them to drive efficiencies with them in terms of promotions, in terms of costs, in terms of delivery efficiencies, et cetera. And then that allows us to bring really terrific consumer choice and have the broadest assortment in our stores, both third party as well as our own products, which we think really wins with the customer. And then that, of course, drives economies of scales and affords you the opportunity to build and partner with brands. This will become a more and more branded industry. Today, we're in the early stages, but we really think that geographic retail piece really unlocks the value of creating brands and creating efficiencies with sales volume in the sector. So if you look at our regional footprint today, you can see we're in Denver, we're in Southeast Colorado. We have room to grow to the north. We have room to grow to the south. to the west on the western slope, and also to the northeast. So there's about 672 retail dispensaries in the state of Colorado, and we have 23 adding 2 more. So we believe that there's still tremendous growth to be had in terms of opening new stores and acquiring stores and making those and partnering with those sellers to bring better choice and bring better costs to consumers. So we think that wins. And then we're also down in New Mexico. We've added 2 stores since we've gotten started. So sorry, I think I missed that earlier. I think I said Albuquerque, but it's Ruidoso and Clovis. We're excited about down there. We do have some others in Albuquerque that we're working on as well. But we see there's great opportunity to add more stores in New Mexico, and we're working on that. If you look at the markets, we obviously Colorado's a much larger market in terms of cannabis. It's still the second largest cannabis market in the U.S. at a little over $2 billion. And then the cannabis market down in New Mexico, that total addressable market's growing from was about 260, 270 a year ago, and it's growing very quickly to, we think it'll be $600 to $800 million. So a nice sizable market there where local contacts and real estate decisions matter. And the team is working hard to find us more locations there to serve our customers in New Mexico. So if you look at expected growth, here's the New Mexico opportunity. So we are vertically integrated in New Mexico, which is a difference than Colorado, where we have not been completely vertically integrated in the fact that we buy outside flower from great growers in Colorado and New Mexico. We produce our own, we manufacture our own products. That is evolving and changing as we see more brands and more suppliers coming to New Mexico. So we really expect that to be a great opportunity for us to bring great products in the form of wide assortment, high quality, and service to our Greenleaf stores, which we think will make us different in New Mexico and allow us to win at retail there. And we think the market's going to continue to grow, and we're very pleased with the growth rates that we've seen since April the 1st, since adult use came into effect. Our house of brands we spoke about. Purple Bees is our platform for vape cartridges as well. We've also launched an upscale brand called Autograph in the vape category. We believe those two will serve in that best, better, best category. So if you think about good, better, best in terms of merchandising, both of those are high quality products that are of good value, and we see our consumers driving more and more sales towards those. So we're excited about that. Of course, Emerald Fields is our dispensary. It's more of a canna boutique. It's a little more towards luxury, a little softer colors, a little different demographic. And then we have Starbuds, which is really our main street format that we have a majority of our stores in Colorado. Growth Forth Gardens is our new cultivation. So that's under that brand as we grow flower and produce that for retailers, our own stores as well as others. It will be under the Grow Forth Gardens banner, and then our Greenleaf, which we're really excited about in New Mexico. And we really believe we've got the leading platform on the retail side with our Greenleaf there. So, and why brands matter. If you look at where the cannabis sector is today, multiples, particularly on an adjusted EBITDA basis, 2022, and then looking further towards 23, are at low levels. And it is a great entry point in time if you read the analyst community and just personal conviction and looking at where things are going to head. We very much believe that good cannabis companies will trade well north of where they're trading today. And if you look here, we've got Schwazze trading about a little over 6 times adjusted EBITDA, where you can see some of these great some of these great vertically integrated retailers and product companies are in the, they're valued in the mid-teens, which is certainly where we think our industry will trade over time. And we certainly think that we will trade there as well as we continue to grow and drive scale. So it matters to have brands for sure. And then some brand success here. We took product B with our promotional activity as well as working closely with the supplier and took them to the number one position in a category, and really worked closely with the product B supplier where product A was not working as closely with us and didn't lean in with some of the top to top and product marketing and merchandising initiatives we were working on. And we really were able to drive product B to drive not only their success, but also drive the category, which is important, that you're not cannibalizing the category by promoting one brand or one product versus another, that the category gets the lift. So we've invested heavily in data analytics. So we're able to call upon that and to, do a lot of A/B testing with our brands and with our merchandising capabilities. Building Purple Bees, we took Purple Bees from really not having much of a launching that brand and getting into the distillate market and the vape market. And we're very, very excited about what we've been able to do there. We've been able to grow the brand on our own shelves. It's now 20% of the category of vapes, which started at zero. So the ability to build our own brands is very important too. And then working on some of those efficiency pieces that we talked about, driving manufacturing output. We've been able to increase our Purple Bees distillate business, which is roughly 30% of the Colorado market, and been able to drive market share and drive efficiencies there, and been able to drive output up almost 200% since we've taken over. Our operating playbook at retail, it's really the way we think about running our business, from operations, merchandising, and marketing. We've been fortunate in that we've been able to add almost 6 points of gross margin on average to those operators that we've acquired. And that's through merchandising, pricing, promotional effectiveness, and really working to clean the stores up and give the customer what they want. So we think that playbook works today, and it's proving to work in New Mexico. And we believe that can translate into possibly other states down the road as well. And we've been able to take COGS down. Certainly, if you look at our percentage, we've taken the percentage of COGS down as a percentage of retail as we work through working with our key suppliers and driving efficiencies and costs out of the business. And we'll continue to do that and look for opportunities in the supply chain to take inventory out of the system as well as costs. And we think there's still quite a bit to do there. It really starts with this management team. We have a terrific management team that work extremely well together. This team's been together for nearly 3.5 years and really took this business from little to no revenue to we're on a run rate of about $170 million. And I think we've said we'll be north of $60 million of EBITDA on a run rate basis in the fourth quarter. So from less than 20 employees to well over 700. And this team has done a terrific job of not only being good at what they do, but working really well together. And we've had our challenges, but it's been a lot of fun too. And we're excited about the next phase of growth for the company. Making a difference. This is a great business where you don't get these opportunities when you're in the manufacturing business and you don't have consumer facing opportunities. So making a difference with packaging and where we source our products and the quality around them, and ensuring the highest quality, the safest products, making sure that we run Schwazze with terrific, solid corporate governance. So there aren't surprises. And, you could be proud as an investor or as a team member or as a management member of Schwazze, and doing things socially too, as volunteering and working within our communities to help students, to help infrastructure, to help education, to help health and wellness, and mental wellness. And that's one of our key pillars that we want to work on. And then, of course, environmental, doing our part with recycled packaging and things that we can do. Looking at efficiencies with our heating and air conditioning, so we use less energy. So all those things are important as this company has a soul, and certainly our team members. This is an important part of what we do every day. And then I'll turn it over to Nancy.
Thanks, Justin. Just a quick look at our capital structure. We have about 137.9 million shares outstanding as of the end of Q2. Those are fully diluted, and about $173.4 million of debt that combines seller notes and the convertible debt that we raised at the end of last year. Cash is 33.9 at the end of Q2. Leaving us with an enterprise value of $332.5 million, which is, as Justin said, about 6.7 multiple against our adjusted EBITDA from the average analyst's projections. And that number, that was done at $1.40 stock price. That number obviously varies as the stock price goes up and down. But it gives you an idea as you compare us to others, and we're going to look at that in a minute. Q2 performance, we had $44 million of revenue, and our adjusted EBITDA was $15 million for almost 34% EBITDA margin. And that is one of the best in the industry, and we're very proud of that number. Also, I think we've commented on cash flow before. Although our operating cash flow for the first couple of quarters was negative, we anticipate we will have positive operating cash flow before acquisitions as of the end of the year. Again, something that a lot of the cannabis companies cannot attest to. So we're very proud of the fact that we're running this as a business. We need to generate cash flow for us to continue to move forward and our strategy. So that's something we're watching very carefully. When you compare us to our peers, here's the multiple comparison. You can see we're at 6.7. There's a number of large players that run between 6.5 and 15. And then when you look at kind of regional MSOs, which are more like us, they kind of run the gamut between 5.5 and 26. So we believe obviously that there's a lot of opportunity for us to grow in that multiple. And we believe that, that is going to increase as federal descheduling and potentially safe banking come to play, and move us more in line with just a regular industry. And then lastly, you can see our upward financial trends. So, we're moving from revenues that last year we grew at 352. Obviously, we're growing on a bigger number this year. We think that'll be about 63% year over year growth. Our margins are improving. Numbers may stay the same, but we'll be investing in price. We do believe that there's margin to be gained. And then our EBITDA margin as a percent of revenue is somewhere in the high mid-30s. And we're, again, I think that's a very good number in comparison to our competitors. We're committed to unlocking the full potential of the cannabis plant to improve the human condition. We really believe that this plant offers a lot of solutions to people's problems. And by legalizing that, it can be a solution for a lot of people. I think we're ready for questions if we have any.
Thanks, Nancy. Joe, we'll turn it back to you.
I'm right here.
Okay.
Great. Thanks, Nancy, Justin. Great presentation. And as Nancy said, we are going to open it up to Q&A. So the first question is, Is Schwazze still on track for achieving operating cash flow profitability for the second half of 2022 and its other updated revenue and EBITDA goals for the year?
I can handle that one. So yes, as I said before, we believe we will generate positive operating cash flow before acquisitions for the year. The next couple quarters both should provide positive cash flow in each of the 2 quarters. We haven't commented on anything in terms of meeting the expectations. We'll update people as we get into our Q3 announcement in November. But to remind everyone, those ranges were 175 to 200 million for revenue and 60 to 72 million for EBITDA for the year, or annualized for the quarter on fourth quarter numbers. So at the end, during the Q3 announcement, we'll probably give some guidance on what we believe the whole year looks like, not just Q4.
Thank you, Nancy. Next question. There's a shareholder out there who's curious that with one, if not the best name in the industry as far as StarBuds is concerned, why wouldn't you use that banner or name across all of your stores? Justin?
Yeah, great question. So we have a license for StarBuds in Colorado. That is what we negotiated with the owners of the StarBuds mark and brand. So we don't own it outside of Colorado. So we can use that within the state of Colorado is why we don't use that in other places. And we have a lot of good results with Emerald Fields, and our Greenleaf is the key winner down in New Mexico from our perspective, with lots of brand loyalty. So we want to, the goal is to give customers what they want, and the name on the building is important, and so we don't want to change those out just willy-nilly.
Thank you, Justin. Next question. Is there a share price level that Schwazze would ever consider repurchasing shares?
Yeah, let me take that one. Right now with our opportunity to grow as quickly as we can with good accretive acquisitions, if you look at the use of capital, it's more efficient to use it for growth right now versus share buybacks. So we are a growth company. We have uses for cash and capital. It's scarce today, so we're going to continue. We see a ton of growth opportunities in Colorado and New Mexico that from an IRR perspective make more sense than buying our share back. But good question.
Thank you. Next question. Can you talk through some of the recent safe banking efforts today and what your thoughts are on likelihood and or timing? And while we're in that frame of discussion, perhaps you can also comment on President Biden's recent comments on marijuana. Justin?
Yeah, this is, I don't want to start celebrating too early, and you know what, there's no promises here. But if in the last 3.5, 4 years since I've been involved with cannabis, I'll make this statement. I have been negative and doubtful that we were going to have anything in the near term, whether it be safe banking, the MORE Act, descheduling, decriminalizing. And I would say this is the first time where I've had real optimism about safe banking in the near term. I think it's more likely than not. That's the first time I would have ever said that in going through our channels. And we have good discussion and dialogue with folks in the White House and folks in both the Senate and in the House. And I think there's a real shot that we could have safe banking in the lame duck session. And, we shouldn't celebrate the good, but I'll tell you, it's very exciting with President Biden really stepping up to one of his commitments was looking at descheduling and decriminalizing cannabis. This is a monumental move, and I think it's It's going to provide a floor for the industry. And, safe banking will unlock a lot of value. I think we'll have better lending, lower cost of capital. It's going to do a lot for the industry. I think it will spark valuations where I think we're bumping along the bottom in terms of company stock valuations. And I think this is going to be an incredible time. I've read a number of equity analysts, and if we do some math on ourselves, if we get safe banking and get some of this help, I mean, some of the valuations of integrated cannabis companies could be 3x what they are today. And that really plays into our hypothesis in investing and growing this company is that over time, these businesses are going to be a lot more valuable. So I think this is incredibly encouraging. I think it'll be good for those who were arrested with minor convictions, with possession charges at the federal level. I encourage the governors to meet President Biden in their state as well in doing that. I mean, a lot of these laws are archaic, and let's get on with it. This is a industry that can drive jobs, can do a lot of good for people, and I think this is the first time that I think we've got real political movement, and I think it's going to be very, very exciting, not only for the industry, but for Schwazze. So we're pretty excited around here.
Thank you, Justin. All right, next question. Many Colorado dispensaries and growers have been talking about pricing pressures and reduced demand. Can you talk about what you are seeing at the dispensaries in Colorado and in New Mexico?
Yeah, so if you look at our business, Colorado, let's take Colorado as a market. Colorado's down revenue-wise about 25% versus last year in total. And you look at that, it's driven by pricing. So if you follow margins at retail all the way back through the supply chain to growers, tremendous pressure on pricing. If you look at wholesale distillate prices, they're off almost 80%. If you look at sort of mid-tier select or elite shelf cannabis, it's off almost 50% in terms of pricing. So that has really hurt a lot of the growing community here. It's forced a number of businesses out of business. And I think it's going to be one of these things that the strong are going to hunker down, and we're going to be one of them. And we're going to continue to grow market share during these tough times. And it's going to create an opportunity for us to continue to be a consolidator in Colorado with buying more stores and partnering with suppliers and vendors like we're doing with Lowell Farms. I think that creates a lot of opportunities for us to create value for Schwazze. So we'll make the most of it. Certainly, we'll welcome back better conditions, down the road. But right now, it's pretty tough sledding. Our business is holding up very well. We're outpacing the industry by close to 15 percentage points in terms of growth. And our unit, when you look at grams sold, grams moved through the stores, as well as edibles and the other categories, we're relatively flat. So we're selling products, we're taking market share, and we're happy about that. But Colorado's been tough. New Mexico is growing very, very quickly. We're excited about it. It is what we thought it would be, and how we've gone to market. I think that team down there has done a terrific job. We've added 2 stores recently. We've got a number of other stores that will be announced by the end of the year. Probably the tune of 3 to 4 more by the end of the year is how we're thinking about it. And we're excited about it. We've got a good roster of new store opportunities next year as well in New Mexico. Our growth plans are simple. We're going to continue to grow in Colorado to be the number one vertically integrated business in Colorado. And we're going to continue to work hard to be number one in New Mexico. And we're closing in on that. So I'm really proud of the team.
Thank you, Justin. All right, Nancy, over to you. What is the total share count if all of the debt and derivatives were converted?
The debt converts at 2.25, so around 50 million. I don't know the exact number right in front of me. And As I said, we have about 137.9 right now. The derivative or the convertible will change as PIK interest gets accumulated to that number as well. But so if you were going to add the 50 million to the 100 and let's say 40 million right now, you'd be at 190 million shares.
Thank you, Nancy. All right, Justin, here's the $1 million question. Why is the company trading at such a large discount to its peers?
Yeah, it's really a size piece and it's a float issue. So we need to continue to get bigger and to tell the story about what we're doing. We're producing industry leading EBITDA margins. We're going to generate free cash flow, which probably makes us one of 4 or 5 companies in the entire industry that are doing that on a smaller base. So this business is run well. I think we're really prepared to launch new products and brands. So we're positioned well. We got to get bigger and we got to get more float out there and get larger retail investors in and create a bigger market for it. And it just takes time to do that. But when I talk to some of our investors, and obviously I'm an investor here too, and I really think about it this way. I think this is a unprecedented opportunity to create generational wealth in cannabis for our generation that you're not going to see in other sectors, number one. So cannabis is positioned very, very well going forward when you compare that to other sectors in our economy. So growth and safe. And then you look at us, we're well run. We generate free cash flow from operations. So we can decide how many acquisitions we want to do. And we really don't need safe banking or some of these other things to happen for us to continue to be strong and grow the business, which gives me great comfort. So a safe bet, but also a growth company within the sector. So you get all of that. So you've got a safe company with a good, solid management team and a growth sector with a growth company. To me, that says people ought to spend more time understanding our story. And we continue to take market share in very difficult markets that I think this team will continue to do. And this will play very well in other states as well. And we'll be very selective and thoughtful about where we go and making sure that we can build a really nice business and go very deep. Market share matters here.
Thank you, Justin. And I can tell you that there's over 70 people listening to your story today. So that's a good sign. How is the home delivery program progressing? And are you pursuing it in other areas outside of Aurora?
Good question. Aurora continues to progress. I would say it's a little slower than what we've seen in other sectors take off. There's a number of new delivery services forming in Denver. So we're still working with localities to be able to do that. So we want to serve the customer where they want to be served, whether it be, as we've said, in our store. If you want to order ahead, come in and pick it up quickly. If you want to have it delivered same day, or if you want it delivered tomorrow, if you order in the afternoon windows. So we'll continue to offer that. I would tell you, we have seen our customers really still enjoy coming in and looking at our flower in the large, really nice glass. It's curated. It's great. It's a great experience, and we can get you in and out very quickly. So we've not seen that conversion have you seen in other sectors, but certainly we're prepared for it, and we continue to monitor it and manage it. I think over time it'll be a bigger part of this business, but today it's not. And then in New Mexico, we'll find the right solution in New Mexico. We're not doing that today.
One of the things to remember about cannabis is it is jurisdictional. And so in terms of delivery, you can't pick something up in Denver and move it to Aurora, for example. And so those are the restrictions that I think make delivery just really not as popular in cannabis as in other industries. as well as the fact that people really do enjoy coming into the store and talking to the bud tenders and finding out about new flower, et cetera, that they're not going to get if they use that delivery mechanism.
Thank you, Nancy. Justin, some companies are downsizing and streamlining by shutting down stores, grow operations. Is that something that you are considering?
We have an obligation to make sure that we run the business very efficiently and watch our cost of goods, as well as not only watch, but manage our SG&A as efficiently as our potential leads us down to. So when you think about that, yes, we work on lowering our SG&A expenses to do more with less. We certainly work on, we're launching our new distribution center in Colorado that will take a pretty good sizable percentage of cost out of the supply chain in terms of driving efficiencies from the product being developed, manufactured, grown, all the way coming to our store. And certainly we'll share some of those efficiencies with the consumer. We'll share some of those, with the suppliers, and we'll take some of those as well. So yes, in bringing lean process practices to retail, to manufacturing, distribution, and then on cultivation. So where we go and process map and look to see where there are bottlenecks, we look at quality issues, and you want to make this as efficient as possible. So that's really, we've been working on this since we came into the industry. So we're continuing to look at that. If you look at it, all of our stores are profitable today. So that makes us, I think, pretty unique. Where in other retail sectors, you may have a portion of stores that aren't generating four-wall profit, but we generate four-wall profit in all of our stores today, which we're proud of.
Thank you, Justin. You've hinted in the past that you are considering other states and you are going in that you were going into as a, would it make sense to break into Texas there in some form of a medicinal standpoint?
A great question. As I said, we're focused on Colorado, New Mexico today. We see that's going to be number one growth opportunity for us. There are other states that I think will be interesting down the road. We're not focused on those today, but certainly there are, as you look at our regional footprint, there are certainly states where we think there could be a good opportunity for us to enter. Certainly we're building stores on that Texas border down in New Mexico. So we're familiar with the state of Texas and where that is from a development standpoint of the industry. And there's other good states as well. So we'll continue to work here, continue to try to get our operating playbook as efficient as possible, find good opportunities where we could partner or buy a really nice platform company in another state that we could partner with and grow it and make it better. So but doing greenfield and starting with one store or a grow, it really doesn't make sense for where we are and what our strategy is.
More question at the top of the hour. And then we'll close it down. We'll still as part of the, are you investing in Oklahoma?
Joanne, you're breaking up quite a bit. We didn't get that last question.
You're losing me. Yeah. Okay. How long do you think you're on the OT?
Let me turn my camera off. Let's see if that helps.
And are you interested at all in investing in Oklahoma? Apologies, unstable. Trade on the OTC before it's listed on an exchange. And are you interested at all in Oklahoma?
Not interested in Oklahoma. There's good operators there. That's not some place we would probably want to do business right now with kind of where the competitive landscape is, and it's a very competitive market. So I would say that's not of interest to us at this point in time. Doesn't mean it wouldn't in the future. And then regarding OTC, we'll continue to trade here, and certainly if we get some help from being able to list on a New York Stock Exchange or NASDAQ, we would certainly look to do that, to give us just more eyeballs on the stock and create more float for sure. In the meantime, we're trading on the NEO in Canada and trading in OTC and building our investor base one day at a time. And I think we'll continue to do that.
Okay. Thank you, team. Now, before we end, I'd like to turn it back to Justin one more time for some final words. Justin?
Yeah, just I want to say thanks to our leadership team, Nancy, and the rest of our team. I want to say thank you to all of our team members that have worked so hard the last several years, but particularly this year. It's been a tough market in Colorado, and they performed extremely well in a tough environment, and doing very well, taking margins up and continue to move units and take care of customers. So I just want to thank them. Certainly want to thank our investors and our board for supporting us. I think we do have something very, very special here that's getting more and more momentum. And as I said, for those potential investors or existing investors, this is a growth sector that I think is bouncing on the bottom, and again, it's going to have a really good upside to it. And I think it'll perform. I think it will perform very well versus other sectors. And then we're a safe, well-managed growth company within that sector. So to me, that's a great confluence of things that should lead to more and more investments. And that's why we like the company, love the industry, and we're going to continue to work hard and execute.
Thank you, Justin and Nancy. Great presentation. And thank you, everyone, for your time and attention today. This now ends the Town Hall Forum for Schwazze. See you next time.